war clouds loom over the region. So will Dubai real estate come roaring back or is it a bubble about to burst? In next few minutes, we will break down the numbers calmly and with facts so you can decide. Welcome to Middle East Real Estate Explained. We look beyond headlines to give you a data-driven analysis of Saudi Arabia and UAE market. Today, we zero in on Dubai's property market. After years of booming growth, it's entered now in a new phase. Are fundamentals still solid or we entering into dangerous territory? Let's look at current market snapshot. Dubai's residential market has been surging by December 2025. The price index was up to 12.9% year on year. The Knight Frank reports a record 205,000 sales in 2025 with AED 544.2 billion in total value. In Q1 of 2026, transaction reached AED 176.7 billion. That's a 23.4% jump over Q1 of 2025. Now let's look at three aspects: prices, volume, and buyers. Let's look at prices. The trend is clearly up. Apartments averaged AED 1,949 square feet in Q1 of 2026. Both villas and condos saw a notable gains. A chart of Dubai's price index from 2019 to 2026 would show a steep rise since 2021. Now let's look at the second factor, volume. Off-plan sales dominated about 70% of Q1 of 2026 deals, reflecting investor appetite for a new project. Still, even secondary market deal have held firm. Now let's look at buyers. Foreigners are leading the charge. Foreign investment totaled AED 148.3 billion in Q1 of 2026. That's 26% increase. New investor in Dubai jumped 14% in early 2026. This diversity strengthens the market's depth. Now let's look at supply pipeline. A big question now is new supply. Dubai has tens of thousands of units in the pipeline. Knight Frank tracks roughly 1,000, sorry, 160,000 units slated for completion in 2026. By comparison, about 62,000 units were delivered in 2025. Even with slower competition, 2026 and 2027 could add 30 to 70,000 homes each. Developers have historically missed the deadlines. Only 64% projects delivered on time in 2025. Still, even a partial influx of new homes could slow a future price rises. Let's look at what are the demand drivers. Why are buyers flocking to Dubai? Number one, golden visa and residency. Dubai's 10-year visa program, hugely popular in early 2025, agent noted sizable interest from investors focusing on direct to demand off-plan projects to secure visas. This pool of visa seekers from young tech entrepreneurs to retirees has boosted the demand. Tax and lifestyle. 0% income tax and world-class infrastructure make Dubai a long-term magnet. Wealthy buyers see a real estate as a safe asset. Economic growth. Expo and Vision 2030 driven expansion are beginning and bringing more expats. A rising population, that's Dubai grew 35% since 2020, naturally fuels housing demands. Global capital flow. As one of the financial analysts noted, Dubai absorbs a tsunami of global liquidity, money fleeing inflation or unrest elsewhere. Even amid war or sanction, Dubai is seen as a stable, safe haven for capital, reinforcing demand, especially in the luxury segment. Now, let's come to the topic, that's war and geopolitics. All of you are aware what's happening in that region. So let's look at how we feel this can impact and how the past wars have impacted. Let's look at West Asia conflict, which started in October 2023, and Iran war, which is in 2026. Official data shows transactions slipped when tensions spiked. In early April 2026, during Israel-Hamas war, the Iranians attacked on the UAE, and Dubai saw a 14% drop in deals versus last year. Rental demands also fell sharply. Brokers report locals hunting bargains on near completion unit, some selling 12 to 25% below peak. Flight to safety. Conversely, wars can drive money to Dubai. For example, after Ukraine war, many Russian investors poured into Dubai property. Chinese investors similarly look to Dubai amid home market turmoil. In 2026, we are seeing a balance. Initial caution in the face of conflict, but then return of inquiries once ceasefire held. Bottom line, geopolitical crisis can shorten viewings and delay deals, but Dubai's natural stance means long-term capital inflow generally holds up. Now let's look at some of the micro risk. Beyond local issue, global macro factors do matter. Number one is interest rate. Number two is inflation and liquidity. And number three is economic slowdown. Despite the war-induced plunge in tourism, foreign investment value in Q1 2026 grew 26%, a sign that micro headwinds have not deterred all capital. Short term, expect volatility. If regional conflict flare, expect temporary dips like April 2026 14% sales slide. In very near term, or let's say next few months, watch buyer sentiments and whether small developers deepen discount. Let's look at medium term, that's 1 to 2 year. Most experts foresee continued growth, but a slower clip. Knight Frank projects 3% price gain in prime areas and 1% in the mainstream by end of 2026. That's far from crash. A more return to a normalcy. The pipeline will lift inventory, easing upward pressure. Now let's look at long term. That's 5 to 10 years. Dubai's fundamentals are strong. A growing population, diversified economy. That is because of Expo legacy, tech and finance hubs, and strategic location. If the global climate cools or war ease, capital flow should resume. Even now, Dubai's appeal as a safe and neutral hub keeps it in demand.